Folks, welcome to another Sunday episode. I'm here with Anthony Venuto from InTouch Mortgage Solutions. Guess what we're talking about? You guessed it, the interest rate drop from the Bank of Canada. Anthony, welcome on a Sunday morning.
Thank you very much, Santo, for having me once again. Always an honor and a privilege.
It's exciting to talk about this. For a lot of people, they've been waiting and waiting and waiting. And, a few days ago on Wednesday, the Bank of Canada reduced their benchmark rate by a quarter point. The new benchmark rate is 4.75. And I'm surprised you have time to talk to me, actually, that your phone is not ringing off the hook with new mortgage applications all of a sudden.
It's ringing off the hook, but not for mortgage applications. A lot of people talking about how this is going to impact them or not impact them, for that matter, and more importantly, what it means for variable rate mortgage holders. But interesting enough, actually, is your phone ringing now that we heard this 0.25% drop in interest rates?
There's really no change. It's ringing, but no change from before to after. I know a lot of people counted on this rate. There's a lot of buyers and sellers really counting on the rate drop. Let's get into a little bit later how that affects the actual real estate market. But let's just look at, so the rate is down a quarter point. Who does this affect? Because it doesn't affect everybody.
That's a really good question, because there's a lot of conflation between how this rate change actually impacts people. So a lot of people that may be in the pre-approval process or going through the mortgage application process, it impacts mostly variable rate mortgage holders. I mean, this is the number one person. Those who have lines of credits, home equity lines of credits, that's who it really makes a small change for. As far as their payments and so on and so forth. But I mean, because there's a lot of people that think that, hey, just because the Bank of Canada dropped, fixed rate mortgages are gonna, lock and step drop as well. That's a likely possibility, but we have to wait to see what actually ends up happening and transpiring. I believe next week with the U.S. Fed decision. Unfortunately, in Canada, when the U.S. sneezes, they say Canada catches the cold. So what ends up happening in the U.S. is going to be determining what happens with fixed rates. It's really an interesting time. I mean, as you mentioned earlier on, Santo, yes, a lot of Canadians were apprehensive and, waiting to see what happens with the Bank of Canada. Now that we got the news that many Canadians were hoping for, I think it's just really a step in the right direction for the Bank of Canada, moving themselves from what they call the restrictive territory to a little bit more of a different stance. And my thought behind why the Bank of Canada cut was more because of the economy here in Canada. Actually, to be 100% honest, I think things are really not looking too good with the overall projections of where Canada's headed. So the Bank of Canada did a proactive step to sort of get ahead of it, at least in my opinion.
Okay. I was going to bring that up. There's different reasons why the Bank of Canada would. And look, I got to say to everybody watching, I am no economist by any means. I learned a few things and hear a few things like everybody else. My experience has taught me a few things, but I'm no economist. But you do hear smart people talking and saying, hey, you know what, if they increase or if they decrease the rates, it's probably because they're trying to, kind of fight off a potential recession. So you think that's probably the reason?
For me, if we look at the Canadian, and once again, I'm not an economist either. Same thing, just years of experience and literally making this our vocation, literally dedicating a lot of time to researching this for our clients to be able to provide some insight, has really shown that if we look at Canada in comparison to the US, just the two divergent economies, Canada's just not performing. We've seen all the headlines, the fact that GDP per capita, like the average Canadian, is not faring well. We've seen that slight uptick in unemployment. We definitely have seen consumer spending pull back. So Canadians are strapping up their boots to, maybe weather some storms. And like you mentioned, the Bank of Canada is looking at the situation saying, if we don't make a move potentially to sort of push that recession either further down the pipeline or to avoid it entirely and have this what they call soft landing, then I feel that the Bank of Canada would have to go harder and faster on the rate cuts if we were to enter a severe recession. And once again, that would have other unintended consequences.
Well, everything it's I don't even want to say it's a domino effect. It's more like gears. There's so many moving parts to all this. You said earlier when the States catches a cold, Canada sneezes. Well, yes, but it just seems that when we rely on examples of the past, that this is how it was, because we hear lots of stories. I get lots of comments on my YouTube channel about, oh, this is what happened in 2000 and something, and this is what happened in 1997, and they'll just pick dates and say, well, that happened, so this can't happen this time this way because Bank of Canada is afraid of this or that. But it's a different world, different economy, different market. Everything is different, and there's different tools at our disposal. So, for example, we were the first ones to lower the rates before the US did, or sorry, to increase the rates. And now we've dropped the rate before the US did. So we don't always react to what they're doing. We sometimes think for ourselves. And so we've made the first rate drop. Do you think the Americans are going to drop?
It's an interesting scenario. What you brought up is I always look at it and say we can always nitpick the data. Someone can
absolutely
go in and look at the data and build it around their confirmation bias. That's what I feel a lot of people do. They have one line of sight and they just sort of extrapolate the data to make it fit their vision or their narrative.
Yeah.
But realistically, so we don't know what's going to happen. I do believe, and I did believe this for a long time, that the U.S. and Canada were going to diverge. Canada has the mechanisms. The governor of the Bank of Canada has come out several times confirming this. I mean, the old adage is don't fight the Fed, you don't fight the central bank. They're coming out and saying, okay, we have our own monetary policy, we have our own currency, we have our own flexible exchange rate, we have our own economy, and the governor clearly stated that he was going to do what was necessary for Canadians. Now, of course, with that being said, the United States is our biggest trading partner. We have a lot of ties to the financials when it comes to Canada and the US. But I do believe the US will cut eventually. I don't think now's the time. I don't think they're going to be cutting next week. But eventually, these two economies, they've diverged slightly. There's been this little bit of a gap in our policy rate versus the Fed's fund rate, which is, just for our viewers, if you're not familiar, that's exactly like our Bank of Canada benchmark rate. So the US has one, we have one. And as that gap widens a little bit, it will start to narrow back. It did happen in previous times before, but like you said, the Canadian economy needed this more than the US. That's just the bottom line.
So, if I'm not mistaken, the US economy is doing much better than ours, isn't it? It's doing well, right?
I would say that in a simple statement, yes, I would say they're faring much better.
We're hobbling along, I think, is probably the best way to say that. We're getting by. I'm curious, and I don't know much about him, Tiff Macklin, does he have any young kids applying for mortgages right now? Is that, you think, the reason he dropped the rate?
I mean, we can definitely go off on a tangent and speculate to our heart's content on that. But
does he have nephews, nieces saying, Uncle Tiff, I'm trying to apply for a mortgage. I don't qualify. Can you lower the rate?
At his salary, he can afford to help a lot of people. So that's all I'll say about that.
For sure.
No, I was just going to say, as the governor of the Bank of Canada, I wouldn't want his job right now. I mean, he's definitely under the gun. Against many other people who probably believe that the Bank of Canada should not have moved, I think the Bank of Canada did a good move by going solely 0.25%. I mean, it's as we know, it's not going to move the needle. It is going to relieve a little bit of pressure for some, just to signal to the economy, hey, we're on the right track. I don't think we're going to get there too quickly. And we're not going to see interest rates back to pandemic levels, so to say. But definitely, I think for the Canadian economy, I mean, here's what I'm trying to get at. A lot of times people look at the Bank of Canada, I'm sure a lot of your viewers as well as mine, they'll sort of look at it and say, Bank of Canada and housing are synonymous with each other. But they're actually don't have really much to do with housing. The Bank of Canada Central Bank is to control inflation and make sure the economy is chugging along. And we've heard this on numerous occasions from the Deputy Governor and from the Governor of the Bank of Canada. Yes, housing's a byproduct. It's something they're paying attention to, but they don't make these decisions based on the housing market. I mean, that's not what they're doing.
What are you saying? Folks, you heard it here first. There's more to Canada than the housing market. Is this not what's on everybody's mind all the time? There's more? What else?
I mean, sorry to burst everybody's bubble, but yeah, that's the reality. The Bank of Canada has literally, and if you listen to the press conferences and if you geek out as much as I do with this stuff, it's literally, they've said it. Like, I've clipped to it, I was talking about it this week. Deputy Governor Carolyn Rogers literally says, they've built out models in their April report to show that home prices potentially could escalate or come up a little bit or moderate, and sort of, they're building in these models to their scenarios. So they understand that, look, if interest rates are to come down, they can't control consumer sentiment. I mean, to some degree, you can't control the FOMO.
That's the big thing. Sentiment is everything. That's what's going to determine whether prices change or not. It's all sentiment, right? I mean, let's face it, a quarter point. If you couldn't afford to buy the home before this rate drop, now that it's a quarter point lower, you probably still can't afford to buy it now. Am I right?
You're 100% right. And even when you look at the variable rate mortgage in comparison to what we do as brokers is trying to qualify a client, if everyone understands the stress test, right? So let's say you're working with a 3-year fixed model, right? Because that's the most common product now. And you're qualifying, let's say 5.2%. Well, you have to qualify them with the contract rate of 5.2 plus 2, which is what? 7.2.
7.2.
Now even with the current change in the overnight lending rate and the benchmark rate, bring the prime lending rate for lenders, for banks and lenders, from 7.2 to 6.95, even if you were to get a discount of, let's say, 1%, you know what I mean? Like, you're still looking at closer to 8%. So like that gap, that qualification makes the world of a difference for a buyer that's trying to maybe stretch their budget, right? So it depends on the discount. I mean, a lot of clients right now may not qualify for a variable just yet. And a lot of them are starting to maybe resurrect or reemerge, that a lot of clients are seeing, hey, the Bank of Canada's on this path right now. They're in the easing mode, or potentially in the easing mode, and they want to look at maybe getting into a variable right now. The question is, what variables are they getting? Like, what kind of
Right.
for the viewers, are you in that trigger rate static mortgage, or are you in a true adjustable rate mortgage where your payments will come down when the Bank of Canada decides to cut more?
Okay, so boots on the ground experience. Just my observations from my own personal experience. Again, boots on the ground dealing with buyers and sellers. When COVID hit and a ton of people were told to stay home, don't go to work, the attitude was house prices are going to drop. So many people are losing their jobs. However, the reality is, and sad or not sad, I'm just giving you the reality, the people that actually couldn't work and didn't get paid, the majority of them weren't buying houses anyways, or didn't own houses anyways. The buyers I was working with at that time, they actually had it pretty good. They got to stay home, work from home, and continued to get paid and continued after a few weeks after the lockdown was over. We just started going out looking at houses again. And that's when prices started to escalate. So back then, the I guess the more lucrative type jobs, the higher earners that were looking to buy properties didn't have any issues with job security. Fast forward to today, when earlier we said the economy is kind of hobbling along. I have several clients that I'm working with. You've helped some of them qualify for the mortgage that have had to pause their home search because their job is insecure right now. One of them got laid off. These are high paying IT jobs, many of them. These are high paying, lucrative jobs that they're not sure where their future is. So I just wanted to throw that in, that that's changed in the economy that wasn't here a few years ago. Like I'm feeling it with some of the people I'm actually working with.
I agree 100%. This is why the most dangerous saying in the world is this time it's different. But to some degree, I think over the past few years, I mean, if we look at it, I think Canadians should have learned a valuable lesson. I think there's a lot of lessons that we can take out from the last couple of years. And that's super important, number one, right? We understand that home prices don't always do one thing. Even though there's a lot of Canadians that have these lucrative jobs, yes, I do believe the fear of not being able to maintain their jobs or keep their jobs is going to be a major deterrent from allowing the floodgates to open like it did back at that pivotal point in our history. I really think that many Canadians are more conscientious now, especially because the cost of these homes, at least in Ontario, are very expensive. And that's a big financial decision. And interest rates are much higher than they were just a few short years ago. So I do believe that this time around is going to be a little bit different. Even if the Bank of Canada was to cut their rates, we're not going to see rates. We're not going to see the Bank of Canada cut their overnight benchmark rate to the effective lower bound of 0.25%. Like, that's not going to happen. That was an extreme circumstance. So I think what we're gunning for, what Canadians should be gunning for, is a normal, balanced market where they can qualify for their mortgage if they're able, put in an offer, have a conditional period, have an inspection, all the wonderful things that should be allowed in such a major decision. So hopefully we see some form of normalcy in the market and not this FOMO buying that we did experience a very long time ago.
Conditions in an offer. Wow, sounds like a great idea. Protect yourself. Wow. Okay, so rates down a quarter point. You said that it's affecting variable rates and it's affecting loans like HELOCs. How soon, like, is it automatic the next day after the announcement? How soon should these people see that minuscule difference in their payments?
Pretty much right away. I mean, we've been already getting notifications from the major banks that they're already changed their prime rate. So the prime rate's already moved down. Some banks will be much more quick on the draw, but most Canadians with a variable rate mortgage should be getting notification from their lenders. Now, once again, good point is if you're with some of these banks, most of the major 5 banks, they do not have adjustable rate mortgages. They have those trigger rate static payment mortgages, which means that they're going to see a little bit more of their payment go towards principal. And we just ran those numbers like roughly for a client off the top of my head. Don't hold me to it. But let's say you had a 1% off of prime mortgage, and now that it dropped a quarter percent, you're looking at about 15 to 18, 20 bucks per 100,000. That's what you're going to be saving. So size of the mortgage depends, but for those Canadians, more of that money is going to go to principal if you have an adjustable rate mortgage, the true adjustable one where the payments move up and down, then your payments will be changing probably within the next day or so. Like, or maybe have already changed.
Okay. So when interest rates were extremely low, is it fair to say that most people were actually getting variable mortgages?
Yes, a lot of Canadians, I mean, full disclosure, when you're talking to someone who's going variable versus fixed, I mean, people were selecting the variable rate mortgage because at certain windows it was way more attractive because the rate had a little bit deeper of a discount. And a lot of people, unfortunately, and we have these conversations on the daily, are so asphyxiated to the rate that they
Yep.
almost bypass common sense. And you're looking at their finances and saying, I know you want the variable, but based on your income, it's fixed, or based like structured income. It's not like you're self-employed or you know what I mean, where you have the flexibility to weather a storm. You know, one hiccup, if these interest rates go up, you know, maybe selecting a variable isn't the best choice for you. And a lot of Canadians may have not liked to hear that, but the reality is that's the conversation you should be having.
And they're
And
wishing they would have
interest.
listened.
Yeah. There's been a lot of times, like as I said, everybody makes mistakes, including us. We're not immune as brokers or realtors from making mistakes. I mean, I know for a fact that, you know, during that period of time when interest rates started to creep up, the Bank of Canada, unfortunately, you know, misstepped and told Canadians that inflation was, that key beautiful word, transitory, right? They thought it was going to be short-lived.
Yep.
And, you know, we made calls based on, or not only just us, but Canadians made this financial decisions based on the Bank of Canada's lack of foresight, or, you know what I mean? And at the end of the
Yeah.
day, you know,
And it,
Canadians,
it,
some Canadians weathered the storm. Some Canadians weathered the storm. Some Canadians locked into fixed rate mortgages, and it was really a mess. Let's just put it that way.
inflation was transient. That was right after they said, "Ah, we're not going to be increasing interest rates for a long time. Go out and buy." So let's not go there because that's a whole other, like we beat that horse down. Um, so there was a ton of variable rates back then because it's a lower rate and it was very attractive. And a lot of times with house prices the way they are, people buy their monthly payment. They're not really buying the house. They're buying the monthly payment. And if at the moment in time they can afford it, not thinking that that payment could change, but they buy the monthly rate. So since interest rates started increasing in 2022, right? It's taken all this time for interest rates to get to where they are. Would you say most new mortgages, once we saw an increase in rates, were most new mortgages fixed or variable?
Following the news in March of 2022, I would say variable rate mortgages, or more new variable rate mortgage origination dropped significantly. Not to say that all Canadians didn't take on a variable, because once again,
They're
some
qualifying, right? What
Canadians,
do they qualify for, right?
yeah, what did they qualify for? And
Yeah.
also what their intentions were. The idea is also what the thought process behind a lot of times we're talking to clients like, well, why is it that you're selecting? What is it that's making the gears turn in your head to go variable, so that I can understand better why or what your appetite for risk is. And some clients took on a variable because their intentions were to, you know, maybe renovate their home, fix it up, use their line of credit. Then once the work was done, get the home reappraised, refinance it, and consolidate the mortgage and the line of credit into one product. And
Okay.
you know, some clients had different intentions with why they selected a variable rate mortgage. Not everyone selected. Majority of people selected it for the rate, but some of them had other intentions, because a variable rate mortgage generally comes with the lowest penalty to get out of. Right, it's a 3-month penalty. So a lot of people were chasing the goal, maybe fix the property, renovate it, flip it, right? I had a tenant inside the property, they're leaving, going to fix it up and sell it, then take a variable, so it's only 3 months interest penalty, and then I pay out the mortgage, right? So,
Okay. Anthony, we need to wrap this up. We need to really quickly figure out, where do buyers go from here? What do you think? Are buyers, because of this quarter point drop, are they all of a sudden jump in? Because I know I've spoken with buyers saying, oh, we're waiting to hear the announcement. What do you think? You think buyers are all of a sudden lining up to buy again?
no, I'm not, I don't see that happening right now. And I'm actually happy that that's the case. I'm glad people are taking maybe a wait and see approach. Maybe some people want more proof in the pudding that the Bank of Canada is going to actually follow through and cut rates. I think there's a lot of Canadians that, as I said, learned valuable lessons. Unfortunately, there's those who have the ability to qualify and buy, and those that this even a full percentage point off the rate will still not move the needle for some Canadians. Prices have still gotten, unfortunately, away from a lot of Canadians. So I don't think we're going to see the same vigor when it comes to the market right now. I think a lot of Canadians are just going to wait. A lot of them think home prices are going to, collapse. I mean, look, the Bank of Canada is telling us, I mean, we definitely, we have no precedence for this, really. Like, I really don't think, you can look at history, you can look at points in time and reference them. But at the end of the day, when was the last time we went through this type of situation in the most recent time frame? And I don't think Canadians are going to just run back to the market. I mean, interest rates are too high, job security is not there, the economy is hobbling along, as you said. Like, the symptoms to get a market that we saw in the previous times, like during the pandemic, I don't see it coming. And then again, I didn't see the other one coming either, right? Because I remember, I mean, like, think about it. I said to my friend, and I almost say this, I remember when I called him Mr. Rogers when he came out at 11 o'clock and, was issuing the lockdown and everything. And I was thinking to myself, there's two things that are going to happen right now. Either I'm out of a job, or buckle up, we're in for a ride of our lives. Like, those are the two options.
Yep.
And we all know how that played out. But as I said, well, I don't know. I don't like to forecast. I don't like to predict. I just think as a message to Canadians is, if you're in no rush, take your time. But ultimately my fear is that once that snowball starts rolling, Santo, then it becomes like a bottleneck. That's the problem.
Absolutely.
And it's nothing to do with what we're saying. It's just literally everyone that's been pent up. The Bank of Canada said it. There's a lot of buyers on the sideline. Hopefully they come through gradually and they don't steamroll each other. We'll see what happens. We'll literally see what happens. We don't know.
Anthony, that's all the time we have. Introduce your company. Let's say goodbye.
Well, once again, thank you, Santo, for having me. Our company is InTouch Mortgage Solutions. You can find us online, on YouTube, as well as social media. And just once again, I really appreciate you having me on to talk about things that I don't think a lot of people are talking about.
Thanks, Anthony. Have an awesome day.
You too. Have a great Sunday.